So I want to start off this video by talking about something not directly related to trading, but related to you as a trader or as a potential speculator in the financial markets. Interactive Brokers was down Monday. I was having trouble logging into Interactive Brokers, and it's a brokerage account that I use very regularly. But it was no big deal for me because I just got up and logged into one of my other brokerage accounts. Essentially what was happening for them was they were having trouble with their data storage third-party vendor. Kind of happens in tech. You rely on software from other third-party vendors. This is what happened to Interactive Brokers. For that reason, you could not log into their accounts. I couldn't get in all morning. That's why I keep multiple different brokerage accounts. That's why you as a trader should keep multiple different brokerage accounts, diversify across a couple of different brands. That way, if you're locked out of one account, you can get into another account so you don't miss your morning session. I haven't had a problem with Interactive Brokers up until this point. This was a surprise to me, but it happens. So keep that in mind. Split your money across at least 2 different brokers to avoid this situation happening to you. Moving along, let's get right into news. First name I want to talk about is FireEye. This was a name that I used to invest in. A very, very poor performing investment for me, a very negative return on FireEye stock. Essentially, it's a cybersecurity firm. FireEye got hacked. They announced the hack Wednesday. They think it was a state-sponsored event, Russia, China, something along those lines. Took quite a beating, went from $15.50 as change to about $13.64 on Wednesday. It's a cybersecurity firm and they couldn't protect themselves, so who are they to protect other people? Let me give you a little bit of a backstory with my experience with FireEye from an investor's point of view, not a trader's point of view. I had wanted to make an investment into cybersecurity several years back. I would say 6 years ago now. I had two different stocks I was looking at, Palo Alto Networks and FireEye. At first, I thought I was going to split my money equally across Palo Alto Networks and FireEye, and then last minute I changed my mind. Palo Alto Networks was $90 a share, FireEye was about $40 a share, and I thought I'm going to put 65% of my money into FireEye and 35% into Palo Alto Networks. Well, it turns out my stock picking skills based on this metric of one stock being cheaper really backfired. Palo Alto Networks, I eventually sold for $270. FireEye, I sold for $14 or something a share. So this methodology backfired on me. It wasn't just the price of the stock. I thought FireEye had a lot more room for growth. I thought their product was better. I thought Palo Alto Networks' product was garbage. But FireEye has a piece of shit management that does not know how to manage a company, and for that reason, their stock has never recovered, ever, and might not ever recover, and their management is jumping ship. I just wanted to give you guys a story. Picking stocks is no different than life. There is a certain amount of luck involved. Any guru telling you otherwise is lying to you. I'm telling you right now, there's a certain amount of luck in investing. Sometimes it is very, very poor decision making. Most of the time it is very, very poor decision making, but sometimes it's also bad luck. I've been there. Just like some people in life are taller than other people, some people in life are shorter than other people, some people are born in first world countries. That's just life. You're dealt a certain set of cards and you just do the best you can. Anyway, getting back to FireEye, it might be a good, useful trade, mainly because right after the terrible news on Wednesday, Blackstone made a $400 million strategic investment in this name. It got a huge boost on Friday. The shares shot up from $13.64 back to $14.20. But FireEye has been nothing but a letdown, and there are no signs of FireEye actually, going back up to its once prosperous $40 a share valuation. I would stay away from it as an investment, but with both the good news hitting FireEye as well as this terrible news hitting FireEye, it might make a great trade we might see more money move in or out of FireEye. While watching FireEye, keep in mind Palo Alto Networks has been on the move, drifting higher and higher. You guys can't see my hand, can you? FireEye has, Palo Alto Networks has been drifting higher and higher. And you also have CrowdStrike, which is actually breaking out right now. So it might be worth taking a look at CrowdStrike, ticker symbol CRWD, coming up this coming week. The next thing I want to talk about is Facebook. There has been antitrust lawsuits hitting Facebook right in the face. Mark Zuckerberg is probably shitting his bed right now as we speak. And that is because Facebook has been hit with antitrust lawsuits from the FTC, as well as 48 different states. It's already been having trouble out in Europe. The US is finally maybe cracking down on big tech. This might be a fake shakedown, but we'll see how it pans out. Facebook stock did not actually perform very well. It closed down 2% and actually was weaker than the overall market Thursday, Friday. Good name to watch for this upcoming week. We'll see if more news comes out of about that. But most importantly, let's watch the tape. Let's see how it responds. Sometimes it takes investors a couple of days to really digest the news. Over the weekend, some people will receive the news who don't trade daily and might make a strategic decision. If you're holding Facebook, I'm not giving you any advice on whether to sell this stock, but it's had quite a move. You know, if you've been holding it for this whole time, you've been right. So who am I to give you any advice? I honestly don't know what to do with it. I just follow the tape. Right now, the tape is looking a little weak, but we'll see how that pans out this next week. It might make for a good trade sometime next week. The next name I want to talk about is Disney. Disney had a huge Friday, blowout numbers on subscriber growth. And this is another one that has a very sad story for Frugal Tiger. This is another one of my mistakes. This was a pandemic era mistake, probably one of my largest trades, probably my largest investment, not trade, that I got out of, but I felt like I sold it at a bad price in retrospect. Part of it was I expected COVID to really ravage their theme park sales and things like that. And honestly, of all the investments, this was the one that I was expecting to have the most negative impact from COVID, which is why I sold it. I actually thought even when I sold it, hey, I'm glad I'm getting this price. Price is way higher since the time I sold it. On Friday, it closed above 170. A lot of the close price was due to the fact that their subscriber growth for their streaming platform has skyrocketed. They had anticipated by 2024 that their subscriber growth would essentially hit somewhere between 60 to 90 million. They're basically already there at this point in time. They're actually projecting numbers of around 260 million by 2024 now. And of course, Wall Street's gonna love that. They're gonna eat that shit up. Jim Cramer is gonna go bananas hearing about this. They're turning into a tech company more than anything. They're going right after Netflix. Big news for Disney. 14% on one day, which was Friday, is a huge deal. Let's keep a lookout for this next week. It makes sense why the price of the stock is going higher despite COVID ravaging their theme park sales. The next ticker I want to talk about is Pfizer. I don't think I fully understand what's happening. As investors, as traders, it's not always our objective to understand what's happening. I prefer to buy things that are moving higher, and I prefer to sell things that are moving lower. If you take a look at its 2020 chart, it's been in nowhere land. The US Food and Drug Administration said Friday it was finalizing the paperwork needed to distribute this vaccine. This should be way more bullish for Pfizer than it was, but I think last I checked, the shares were actually down on Friday. It's another situation. I don't know if it completely makes sense to me. Maybe it will take some time for the market to catch up. I'm not saying the stock should rise higher. I'm not actually saying that. But can someone tell me why Pfizer has stayed the same and a stock like Moderna just keeps ramping up higher? Moderna's action, I just don't understand. I don't know. It's very hard to be an investor and picking names sometimes. So watch these names as trades, but until the tape moves, I'm not trading this. It's just something I'm going to be watching the action of. The next two names I want to talk about, and I apologize in advance, I missed these last week because I'm just sick of this IPO bullcrap that we're seeing every week. We had Airbnb IPO and DoorDash IPO this past week. I didn't talk about it last Sunday, and quite frankly, these are not names I would even trade on the week of release. And when I saw these valuations, you guys, I was floored. I mean, my entire face was bright red, kind of like it is right now. These companies in total have a total revenue of $5.8 billion, and that's their total revenue. And their street valuation, their market cap combined are about 70 billion. If you took their highest prices of what they were floating at Thursday, Friday, their combined valuation was over 100 billion. DoorDash and Airbnb. Can you please tell me what's happening here? And on top of that, you have two companies that are hemorrhaging investor money, hemorrhaging venture cap money. They have a negative 20% profit margins. I don't know if they're gonna even be able to make a profit, but I feel like Wall Street and these venture caps, they made all their money, they're getting out, they're selling their shares out to the market. They've acquired their liquidity from the public retail investors. I'm a little scared for other people who are choosing to buy these IPOs. If you were an IPO investor in 2020, like if you did buy IPOs, and I did buy a few IPOs, I bought American Well and I bought Palantir. But if you are an IPO investor in 2020, you are paying astronomical prices for some of these names. Snowflake was another name. I know a lot about the company Snowflake. I actually used to do consulting work in big data tech, essentially out in the cloud. Snowflake was a major vendor in that space, and I think it was a great name. I was even going to buy a small position, maybe 200, 300 shares, when I thought their IPO price was $120 a share. When they IPO'd at like 240, I was like, fuck that, guys. There is very little chance I'm making money in the long run. Can you make money on these names? Yes, but I feel like you just have to have a risk appetite that is through the roof. You know, you have to have a strong stomach to be able to process some of this risk. In 2020, it's worked out very well. So many people are jumping on these IPOs. These are some insane valuations, and I feel like one day, you're gonna be holding the bag. I have trader taxing. If I do lose money on these IPOs or overpaying and my trading goes bad, I can deduct my losses against other losses. But there's a lot of people out there that don't have trader tax rules set up for themselves, and they can only deduct bad investments at $3,000 a year for the rest of their life. So it's very important before you buy into some of these names, before you hold the bag on some of these names, really watch out for these IPOs. This valuation is nuts. Let's go over some earnings for this week and some other stocks to pay attention to. Pay attention to Palantir. That's a name I do own. I wish I had more Palantir stock because the price has actually tripled from the time that I bought Palantir. I'm not talking about from the purpose of investing. I'm talking about from the purpose of speculating. It seems like these dips in the name Palantir seem to be getting bought up. I don't think it's super overvalued compared to some of the other names. They might be on track for profitability, but most importantly, I think as a trading name, you see a lot of the things that you look for as a trader, some good fluctuations, dips getting bought out, and just essentially movement in the price of the stock. So look out for Palantir, add it to your watch list. Watch the tape and try to trade it. Even if it's in small size, it doesn't cost you anything to trade stocks for most brokers. Just look at the tape and see if you can kind of figure out how it's moving. Also pay attention to Moderna, and I shouldn't have to say this again. Of course, you have to pay attention to Tesla. It's kind of a name everyone should be watching daily. In regards to earnings this week, the names I'm looking out for is Lennar on Wednesday. There's nothing worthwhile Monday, Tuesday. On Thursday, you have FedEx, Rite Aid, General Mills, and Accenture. FedEx is an important one. It kind of will give you a glimpse on the economy. Personally, I think their numbers are going to be pretty good, mainly because I'm getting everything shipped to me right now with all these stores closed. FedEx could have a very good number. Rite Aid, if you have nothing else to trade. Personally, I might actually prefer all these other tech names that I was discussing earlier in the video. General Mills and Accenture are kind of in the same boat. I think there'll be interesting trades. Accenture is a huge consulting firm. The tech industry has a huge reliance on eccentric consultants, and I think tech has just been skyrocketing higher. So there's very little hit I can see to Accenture's business. It might actually be worth doing an earnings gamble. Just do your own due diligence, as always, guys. Friday, we have Carnival Cruise. I've actually been trading in and out of Carnival Cruise. And you guys, as much as I don't think I can invest in this name right now, because I think it's completely crazy to invest in Carnival Cruise, that doesn't mean you can't buy to the long side. I started buying Carnival Cruise when it shot up to about like 20, 21 a share. But I've been buying in lots of 1,000 shares at a time, and it's actually been a pretty good trade for me. It's a great speculative name. It has a lot of the things we as traders do look for. They're announcing earnings. I'm not expecting it to be great. I mean, who can expect it to be great? But it might be worth paying attention to the added variance in the name, allowing for a good trading environment. Play it either way, short side or long side. I think it'll be a fun trade. You also have Darden. It's kind of in the same boat as General Mills and Accenture. I'm not sure if there's going to be a huge movement in the tape. Nike can sometimes be a great earnings trade. Last week, I had mentioned MongoDB. It might be worthwhile to pay attention to MongoDB this coming week. There's rumors spreading across the street that Microsoft might be interested in buying MongoDB. We'll see. I don't think that's going to happen, but their earnings were actually very good. It's another product I use fairly frequently. Full disclosure, when I was an investor in MongoDB, I sold MongoDB at $70 a share. It's over $300 a share, and I really suck at investing. I don't hold long enough some of these names. And if I just held some of these names a little bit longer, then maybe I could afford electricity from my house. The reason I talk about all these names as well as the news from the previous week is these are the same names I'm going to be watching. I don't trade these shitty penny stocks. I don't know how people do it. I don't like to invest in scams or even like day trade scams. Sometimes if you pay attention to these names, these tapes, they all move sort of similarly, and you can understand the same patterns within each one of these names. If you watch the tape of MongoDB or you watch the tape of Tesla, you can kind of learn how the tapes of those stocks trade, and you can get better at trading individual names. Thanks for joining. I'm drunk. Take care. I just want the money.